What's up, Outliers? Happy Wednesday. This will be our new live stream for the YouTube channel, catching up on markets and really just running through things at a pretty high level. So let's jump right in and see what's going on. There's a bit of a continuation in the rally last couple days. Tech stocks have been a absolutely primary driver here without a doubt. So keeping an eye on how tech writ large continues to perform, because again, one of the things I continue to show is as I'm analyzing broad strength slash weakness, I like to see what participation looks like. And if you take a look at net highs lows, which is really hard to tell because there's a bunch of stuff on this, it's a bunch of different charts. But the part that I want to specifically show you is that net highs lows, both for NASDAQ and New York Stock Exchange, actually contracted day over day. So for example, here, you can see that New York Stock Exchange went from 48 net highs to 31, NASDAQ 55 to 2. So what that tells me is from an overall market movement perspective, as is kind of the new norm if we think about it logically, this is absolutely propped up by very few names. Like that's the reality of it. So when markets like this are propped up by very few names, generally expect to see heightened volatility. And I mean, we have that in spades. Again, don't be confused by the fact that VIX right now looks like it's plummeting, because it is over a 3-month time frame. But if you take a look at what VIX typically is, we are still not like super elevated, but we're at least 10% plus over what VIX tends to be. So if I zoom this out long enough, you can see like current price here is absolutely on the upper end of the range. And again, remember that this range, when I go out this far, it includes a lot of really big skewing metrics like 09 and then 2020. So overall volatility here is still like quite elevated. Yo, what up, Lauren? Lauren says VIX closed green. That's exactly correct. And that is a really, really good observation. And it's because if you take a look at what VIX is measuring, it looks like some people are struggling to find the stream. There you go. I just dropped it in the Discord. What VIX closing up a little bit on the day tells us is we know a few things that we can piece together. The first thing is that a lot of this rally is being driven by a smaller minority of names. We know that this is a very tech-driven rally. So once you start painting this whole picture, tying together these pieces, it is actually pretty informative of how the market feels right now and how the market is positioning more broadly. So I think now is actually a really good time to try and get caught up, at least for me. The positions I'm trying to get caught up are mostly covered strangles that got ran over to the downside. We spent a little while on the pro live stream yesterday going through them. If anybody's interested, always happy to show you what's happening there. I'm going to plan to do an update video soon, especially with the move from SSO into UPro. I think that's a good conversation. But beyond that, it's really difficult actually for me to trade markets like this otherwise. And it's because now that we start to see volatility dropping out of the 20 handle, my risk to reward profile immediately changes. And it's not, the market isn't at a point yet where I feel super stoked to be taking big directional bets. I don't feel really comfortable with a lot of the breakout style stuff as of late, simply because of performance. Not that it's like terrible, but it's definitely nowhere near as high of a hit rate as it is during more favorable market conditions. So from a directional lens, you're kind of like sitting there trying to figure out what to do. And with earnings starting to wind down, this was one of the best possible earnings seasons I literally have ever traded. And it's because we had vol, but things generally came closer in line with expectations, which is actually quite surprising if I think about it, because I fully anticipated things to be an absolute crapshoot like you might expect, because everything is trying to figure out what the deal is with these tariffs. They're absolutely destructive. So all that said, the things that have been working and that I'm leaning into still wrapped around earnings. We're closing out the season there. And then trading shorter term volatility in the indices. And even that went through a pretty rough phase. We actually reviewed that not that long ago, where there was a series of pretty consecutive losing periods with the strategies, which isn't ideal. Reese says, is this a private stream? Couldn't see it. Oh yeah, it is unlisted. That's what it is. That's my bad. There we go. Thanks for mentioning that. I didn't even notice. Yeah, it was private, but now it's public. We're good. Thanks for the heads up, Reese. I was wondering. That makes a lot more sense now. Lauren said, open the largest position. Now I have bubble guts. That's bad. If you feel some type of way about that, that's quite a negative thing, because it means that you're sized inappropriately. So if you feel some type of way, I would recommend actually trying to adopt a little bit more of a phased approach with sizing, so that you don't necessarily feel quite that way, because you shouldn't feel like that off about it. Slight level of discomfort, fine, but it shouldn't be that significant. So Reese says, that's why I asked in Discord, thanks. Yeah, that's my bad. I totally realized that I had it as unlisted. The reason why is because I reuse old ones, so sometimes it'll adopt weird settings. But let's get back over to the flexible grid quick. So we already talked about the net highs, lows, and the lower breadth that we're seeing going through this general up move. Now, I want to talk about where we're seeing strength and weakness, and what sticks out to you about this series of million charts. There should be something like directly drawing your eyeballs. The market has had one of its best 1 week periods, not like full trading week, Monday to Friday, but 5 days in quite a while. And there's something that immediately draws my eye. Take a look at the different sectors. Do we see anything in materials? No. Dark Mark is on the right track. Dark Mark says they look very similar in movement. Most of them do, but there are a couple that do not. And specifically one that sticks out like an absolute sore thumb. The reason why you have to train your eyes to look for these kinds of relationships is because underneath the surface of this is exactly where opportunity lives. Literally, exactly where opportunity lives. So Reese says VIX. It's not VIX. I would look at VIX different than everything else already, because it's a volatility exchange traded product, ETP. So not VIX. What do you notice about this one right here? It's kind of like Where's Waldo, because there's so many graphs. Lauren says XLV. That's exactly correct. Literally 100% correct. Literally everything else is at least marginally participating in the upside here. Literally everything except XLV. XLV has been getting beaten down like a dog, and it's not slowing down. It had one minor reprieve on the 12th, and that was about it. So if we go to XLV, just to look first at the sector level, this is what it looks like over the last 6 months. This thing is getting crushed. Then if you take a look at what might not be helping, UNH. So UNH is literally down another 20, 30 points after hours. UNH is getting, Silent Sleeper is on it exactly. Silent Sleeper says UNH dying in after hours. That's exactly correct. It's getting smashed. Now, we talked about this on Sunday, and I literally told you guys that immediately following that conversation on Sunday, I put a position on to trade it to the downside. I went with long puts and short calls, so I made synthetic shorts. And it's honestly just because I didn't have a sense of severity. There's no part of my body that expected this gap or this continuation or the next gap that we're seeing. That's not why the trade went on. And there's no way that I would take any credit for that movement. I didn't expect that severity. I expected the direction. But if I expected this full severity, I would have gone long out of the money puts at scale. That's exactly how I would have played this had I known the future, but I didn't. So that's why I went with synthetic shorts, because it gives you a little bit of both worlds. You can kind of finance some of the long puts from the short calls. The problem with stuff like this is the vol is all on the put side. So you actually have to size up on the call side quite a bit in order to get something close to what you might want to finance the long puts. So not fully optimal, but you make it work, right? That's the whole idea here. But identifying opportunities like this is huge. And it's not just UNH, by the way. It's, again, if we go back into XLV as the sector, we've seen this for a while where it's underperforming literally the rest of the sectors. So when you see something doing that, it should always draw your attention, even from a very loose perspective. And when I say loose perspective, I mean even from like, hey, this sticks out to me. So if we take a look at the sectors and then we go into healthcare, let's take a look at the 5-day change. On the 5-day change, I don't know how many names are in this in total. Does anybody know off the top of your head? I don't remember. Suffice it to say, what I was going to give you is like the number that are up after the last 5 days compared to the number that's down. I just don't know how many is, and I'm not going to count. But what we can do is see how many are up, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. 23. And that's absolutely a minority because I have to scroll twice essentially to get to the rest of this list. So this gives you good pot odds from finding things to trade to the short side. And the other thing to pay attention to as you're analyzing stuff like this is take a look at PODD. If we look into PODD, PODD just had a baller earnings release. Absolutely crushed it. Notice how EPS actually underperformed, but they had a good overall earnings release. Why am I showing you this? I'm showing you this because this gives you another great exercise to always add to your market analysis toolkit. And that is when you see big sectors that are down, that are literally getting dragged down by the bulk, find the strength, see what's strong. That doesn't mean you have to trade this. I still personally wouldn't, to be completely honest with you. It's just not worth it. There's other opportunities out there. Is it a bad trade? I don't think it's terrible. But there's other stuff out there that's more appealing to me right now. However, you had better believe that this gets added to a watch list because we know PODD is doing really well when the majority of this sector is absolutely sucking wind. That's a good thing to keep in your back pocket because what do you think sometimes, not always, but sometimes if in the near term, if the timing lines up and healthcare, for whatever reason, starts seeing appreciation, a lot of times you'll see some of that bleed into the top performers. Now, you can apply a rote system, though, and say, okay, I'm going to go long PODD once healthcare goes up because there's a momentum factor and there's a really high chance for reversion in momentum depending on what time frames you're analyzing. And you have to be aware of this, because otherwise you could very easily be setting yourself to be put in front of positions that you think should be better and they might not be. So that's something to pay attention to here. Now, with momentum factor, something to keep in mind is, typically speaking, there's a couple key timeframes that matter a lot. So like 1 month, 3 months, 6 month, 12 month. Those are like really common periods to analyze. 6 month, 12 month tend to have higher continuation. This is largely for growth stocks. 1 month, 3 month often have reversion. So not always. It's a statistical measure. There will be plenty that don't, but it's something to keep in the back of your mind as you look at it, because like seeing this kind of really good move over the course of 1 month, right, where a good majority of this move comes over the last month, well, you kind of have to pay attention to that. Now, this does not get overwhelmed by post-earnings announcement drift, however. If you have a really strong catalyst like post-earnings announcement drift, that can overwhelm a lot of momentum reversion tendencies. Welcome to momentum. A lot of different factors. There's actually some really, really good studies out there. Let me find one of them for you from SSRN. This is intraday. I don't want that. No. This one. This one. So this one is a preprint, so it's nothing to overweight, but that is a great paper nonetheless. You just always have to, again, pay attention to what you're reading, the pros and cons. This is also a really great paper, and this one is useful for shorter term effects. I'll drop these really quick in the Discord so that you have access to them if you're interested in them. But these are really, really good to check out if you're interested in momentum, which I feel like a lot of people generally should be interested in momentum, because it is one of the simpler market effects that exists. So Moody Blue says, can you take a look at AMD? It seemed to have broken its downtrend. However, it's sold down this morning. Yeah, let's take a look. The broader tech moves here have been absolutely incredible. Let's see. Okay. Damn. That's a tough one. So I mean, this still absolutely wouldn't be for me unless I thought there was some sort of big value play, which I don't know if there is. We can check real fast. But without some sort of value element to it, I don't like it here. And man, yeah, it's so tough, because I feel like the reason why I'm so conflicted here is because I feel like AMD is in such a great position to partake in such a significant amount of the broader AI adoption. For a list of different reasons, AMD is not participating well at all. So it creates a natural conflict in the way that I look at it, because I do think that there is genuine opportunity here. And if you get into these things at lower levels, you reduce your overall risk. But it's still so early in this broader move that it would be hard for me to really like it unless there's a value element. If there's not a value element and this becomes a speculative upside play, it's like a 50-50 chance. I know that doesn't mean much, but it really, like, this move here is strong if you bottom ticked it, right? If you were able to bottom tick it, you just rode something for 56%. So great move. But again, if you're anywhere, not even top ticking it, if you're anywhere up here, what I'm hovering on is the point of control, which is where the majority of people transacted over the last year. Those people are down 52% in total. I mean, they're not even close, right? Because remember the way that percentages work. When you're down 52%, you need a significantly larger upside move in order to get back to break even. I have a table here that shows it to you on my website specifically for this reason, because it's useful. Here. So if you take a look, 52% down move, you need 106, 104. You need, and the reason why I'm adding 106 is you have to account for a little bit of the volatility component to it. But in a gross move, you need essentially double and change in order to get back. And it's not even halfway there yet. Well, I guess it is just halfway there, I should say. Give it some credit. So that's why the value element in my mind is so important. There has to be something that justifies this. So let's see what we can find. And let's see. I gotta pop the door for Thor. He's sitting there just one little scratch at a time. Let me know it's time for him to come in. So let's see. I want to actually look more so at its earnings. I also don't know why they would use the trailing 12 month for the PE ratio. I care so much more about a forward PE. Yeah, I mean, like, would this, like, does this shock you? I don't really care so much about HPE and Seagate. Like, you can call them close or whatever, but specifically AMD to Micron and IBM, I think that's a fair comparison. Take a look at the value, right? It's really, really difficult to argue any sort of like value proposition here. So it could just be that people start to say, like, I think this is overvalued and not really interested in it at this spot, which I wouldn't blame them, because like I told you, in order for me to be interested in it, there literally would have to be some sort of reasonable value element to this that I just don't see at the moment with how it, at least how it's priced. So let's take a look at the options though. That's way more than anybody needs about my fucking opinion. And let's see what we can objectively learn. What I'm doing is I'm throwing it up in another comparison tool real quick here. The reason why I like this one is because it breaks down a couple things a little more in depth that I like to take a look at. So these here are really useful. So revenue growth is good. Yeah, see, like, this is better. This is way better. And this is why I like forward PE so much more than trailing 12 months. Because on a forward PE basis, this actually looks good. Trailing 12 months, I don't love it there. But price to sales is soft, but not too soft. I mean, it's way cheaper on a relative basis than NVIDIA, which I would have to expect. I don't care about these. Here, growth. Yeah, growth is good. So I think there is an argument there, at least somewhat. Let's take a look at the options. Market thinks so. So 2.26 mil on the call side. That's pretty heavy. On the day, even split. That's interesting. Bid to offer. Let's take a look on a weighted basis. Ooh, don't love that. Super short. Damn. Wow. So this is either a pretty healthy bit of profit taking that you see. Man, that's incredible. The reason why I'm stuck on this is take a look at it on a relative basis. If we look over the last 30 days, I mean, you've not seen downside premium this heavy. So that's nuts. So bunch of volume in the out of the money, super short term. That's par for the course. We look at open interest, which I'm more interested in. That's so funny. What a great pun. Yeah. So the options positioning is a little bit bullish, I would say. Like overall options markets. Now it's always really, really difficult to tell, you know, what the market is trying to show. But I mean, like the 118s are heavy on the call side. The 129s are relatively not a ton. And then let's take a look at the OI. I mean, it's across the board, like pretty heavy call skew. And let's do one other thing really fast. Let's take a look at the vol surface and then we'll take a look at another stock. Do the out of the monies. Go out to Jan. We'll clear off this front. See. So elevated on the 20 Junes to the call side, but still standard surface as far as I'm concerned. And if we go super far out, a bit flatter. Yeah. I think I would consider this like a really speculative recover kind of play. I don't really, if you like it longer term, you know, that's one way to look at it. But the business, in my opinion, really needs to finish turning itself around, which it's starting to do with decent earnings. So I would want to see a couple personally. The way that I look at it is it's not like there's anything that I think here is terrible with AMD, but I have to look at it in the context of like, where's the opportunity and how does this stack against other opportunities that exist? And right now, I just think there's so many great opportunities if you're trying to do like near-term recovery style trading that this one, at least for me, wouldn't be super high on the list. There's a lot of other stuff that I think looks really good, but it does have wind at its back. It had a good earnings. It just has a really, really long history of a down move to work through, right? Like this is just so much overhead resistance that companies that get bogged down like this, they have to get through so much shit before they can really start to rally. And this is why I like smaller growth names for directional trading a lot, because a lot of them don't have the scars like this that they're going to have to overcome. If you look at something like Reddit, this is another great example of something that came out of the gate super hot and it's starting to show more strength. And I like the way that it's looking, but you can literally see even the price action on the day. right? I'm not super big into candlestick analysis, but I do like looking at what candles represent in terms of supply and demand, right? The overall drivers of the market. And if you take a look at what happened, it had a really aggressive up move on the day. And then the market started selling off into it. The market starts saying, I'll start de-risking here. Some of these people, maybe they're happy to get out at break even or whatever the case is. So when you have this near-term overhead, it always just serves as a natural suppressor to price. And you can always go through it. It's possible, but you need a strong enough catalyst. The longer the overhead is there and the deeper it is, the more you need to overcome it. So then the question to me always is not, is there a trade here? The outlier way to think about it is this the right place for my money? And that's why for me, AMD wouldn't be right now. But if you have a longer term perspective, could be fine. All right, next one. Reese says, where'd you drop those links? I dropped them in the pro side of the Discord just because I had it up, but I'll move them into the main Discord as well so that you guys all have access to it. Bramus says, what are the purpose of the convertible notes GME issued? The purpose of those notes is a slick way to be able to accumulate some capital to purchase Bitcoin without having to burn a bunch of their money. So that's really the purpose. And it's a way to do it without near-term dilution. There is a potential dilution in the future, depending on how they choose to resolve them. But in the near term, there isn't. So then you can overwhelm the cost. Let's say if you get into Bitcoin and Bitcoin does really well while you're in it, that kind of stuff. So it gives them some choices, I would say. Any thoughts on Target? Juan wants to know. Let's take a look at some TGT. Fuck. Staples is underperforming discretionary. I mean, it looks awful. That's about how I feel about it. I'm a little angry at myself because this is like a standard near time short side play that I like to run that I completely didn't catch, which makes me angry. It's like a really high probability play. And then with the dividend come, damn, I fucked that up big time. How did I miss that? I don't know how the fuck I missed that. It's frustrating. Damn it. Let's see how it looks coming into earnings. So earnings is on the 21st. Even split. Yeah, pretty even split. Calls to puts. And let's take a look in the cycle itself. Which this is the cycle that's going to hold. So it looks like a pretty big long premium. That's split both ways. So not really a clear directional trend from the options markets, and the way that they've built out together also tells me that there's not like some sort of really strong near-term speculation that is starting to pipe up. They've literally been growing effectively in unison with one another. So I find that generally interesting. Now, let's take a look at the actual expiration. I want to look at it by premium And we need this expiration here. So it looks like you have a bit more on the put side. 290K at the 95s. So that's a fair downside expectation style positioning for earnings. But what you're going to see is with so much OI in this front expiration, you're absolutely going to see a big shift in the next earnings cycle, because what's going to happen over the next couple days in Target, you'll find that the front expiration is going to be pretty jacked in terms of volume, and that'll be people moving out a little further in time. So this is people playing this near-term move, and then they'll probably start positioning how they want for earnings. So it'll be the next couple days, in my opinion, that'll be a little more informative with how the market is looking to position. But if I were trading this, it would only be from an earnings lens. And we can see how it typically likes to behave around earnings here, which is a little bit haywire. And yeah, I mean, it's literally all over the place. So if we look over the last 12 quarters, 6 of them have been outside. So this almost becomes more for like a long premium style strategy, but that's not really my go-to for earnings. So I wouldn't touch it for earnings either. Broader sector is not looking good to me. So yeah, the way that I look at stuff like this is, unless you have a direct opinion related to earnings, this is just something I would wait until post earnings, right? And see how it resolves. If you have some sort of directional speculation or a vol speculation for earnings, then it's a little too early to put those trades on, in my opinion. So I see a few ways to play it. You can try to play the near-term downside continuation, expecting vol to continue to slowly climb. That's one way to go about it. And you can see that generally reflected here, right? Where 30-day term vol is sliding up, and then you can interpolate that out to nearer term vol and, you know, probably expect a similar near-term trend of climbing into the release. So yeah, that's how I would generally look at it. Near-term downside, probably expecting vol expansion or just waiting till earnings. I think waiting till earnings is probably the way that I would go. FR says, what do you think about Tesla? Let's take a look at Tesla for FR. Tesla. Interesting. Tesla is notorious for how much volatility it carries. And if you ever needed a reminder of that, you can always look at average true range, average day ranges for pretty much any reference period, realistically. So because of that, I tend to like trading Tesla more from a vol perspective. Now, if somebody has a directional opinion in Tesla, I feel like one of the only suitable ways I could even conceive of trying to trade that is with a longer term play in mind, just because of how it moves is a way to consider. Ricky says Tesla looks very due for a decent sized pullback. You can't look at markets that way. Like, it's just not how it works, right? So if you take a look at Tesla on a longer term time frame, you could argue, like, during this big up move, it was due for a pullback much earlier, right? And the reason for this actually is not even a whole lot from the stock. It's from a mix of like stock and perception of things. So with that in mind, I think trying to play things like that with the quote unquote like due for a pullback unless you can quantify it in some sort of way and you're trying to play some sort of mean reversion, then yes. So like, for example, what I can tell you is over different periods, Tesla has displayed a pretty high tendency based on a Hurst exponent for price mean reversion. And then what I can do is actually quantify the price that it tends to mean revert to relative to current price. So right now, it's a pretty fair Hurst exponent for reversion back to like 279. So that doesn't mean that it will do that, but it means that there is absolutely a tendency for that kind of two-sided movement. So one of the ways that I would play something like that if I was expecting some sort of pullback is I would literally just set a couple alerts. And then if it starts breaking down through this recent move, then, I mean, pretty much anything below here, right? Once it starts falling meaningfully below like the 316, 317 handle, if it does, then it starts to look like pretty likely to move down into the point of control, at least somewhat. But right now, if it starts plowing through this volume node, then it's a pretty clear sign to me that it's bid and people want to speculate upside. So that's how I would play something like that. And with options for these kinds of things, especially really, really short-term ideas, I generally speaking like to go further out in time, but these are the kinds of plays where I'm expecting to hold it for maybe 5 days, if that. So I don't go out that far in time. It's not like more of a positional style play. It's like a very, very short-term idea. So for those, you would probably find me in like 30-day or 60-day options. I typically prefer the 60 days in this kind of thing, but the 30-day might be fine. I'd have to take a look and see what theta looks like comparatively. Let's see. These are at 33 cents. These are at 25 cents. I don't think these would have no gamma though. Yeah, the gamma is like super light. So if I was expecting a nearer term move, I would probably do like the 37 and plan to hold it for like 5 days. But if you don't, if like I didn't get the move fast enough, yeah, time to bounce. So, and it's just because theta would be coming in way too hot and heavy in that instance. My foot is hitting a crunchy toy. This is under my foot right now. Maybe this should go on the mic. So this is the new mascot. Thor is looking highly concerned right now. He's very, very concerned. Hold on. See what we get. He's not so sure about it. It's a good hat. So he's typically like really reserved with grabbing the toy because he knows that he's not supposed to unless he's allowed to, like give him permission. So if you guys want to see something cool, check this out. Leave it. Watch. Leave it. I can pet him with it. Touch it. Boy, leave it. I could put it on him. He won't touch it until I say, okay. And then he'll grab it. All right. Octopus Prime down. Yeah. So I think Joseph says the only way Tesla goes back to 270 anytime soon is if there's bad news with tariffs or some other market calamity. That's the thing, right? Is like there's literally no way to know what causes it. But what I can tell you is that the automotive industry is not in the greatest spot right now. And the other thing I can tell you is Tesla did drop from 480 down to 220, right? So like that doesn't just happen. There's a reason why that happens. And it's not just perception that will do that. There are underlying factors that leads to some sort of concern. So because of that, I wouldn't build stuff like that up in your head in that way, especially if you're a trader. I would not say stuff like, in order for something to go back to blank, something big would have to happen. And it's just because it like skews the way that you then further analyze the name. What I do in those instances is I would say something like this. Or not. What is going on here? Oh, that's why. I'm in the wrong spot, like an idiot. If I look at the probability of a touch, what's the probability of us touching 270 in the next 30 days? The probability of a touch for 270 is 23%. That's what's priced in the market right now. So this is what I care about. I care that based on current options pricing, there's about a 23% chance of it trading there for, again, what choose your adventure, whatever reason it feels like. But that's how I prefer to analyze stuff. So with that, yeah, I'm indifferent on Tesla. I think if it's just like AMD, like with these kinds of names, if you like it really long term, that's cool. Otherwise, I want to see how it performs in this range and then make a decision from there. Again, to give you like context, I just gave you a recent trade that I made in UNH, right? You can see the difference is that there is a very clear direction going on here. You can see it priced into the options markets. You can see it literally just in the standard price performance. So for me, I care about something that's easier to trade. One of the things I find traders do pretty often, and I think it's a mistake, is if you get too wrapped up with an individual name that you like for some reason, and then you like try to find ways to force fit something in that name because you like it, because you follow it. And I really do tend to find that as a pretty big mistake. Like if somebody were to say like, Eric, well, how would you find a trade right now? I would literally follow the scanning process that I've shared with you guys a million times, right? I would start with building context on the broad economy and stock market. We have that. Then I would look at the portfolio and I would say, what does the portfolio need? Do I need long beta weighted deltas, short beta weighted deltas? Does it not matter? Do I need long premium, short premium? Does it not matter? And if there's no inputs from any of those, then it's just looking for opportunities. And if I'm looking for opportunities, it's literally looking for stuff like this. That's just a way better return on the risk from a probabilistic lens than trying to trade something that's mid-range. Mid-range things can be really, really challenging. But again, that's because I don't really have a longer term preference, right? I will trade whatever it is as it presents itself. So yeah, I think something like Tesla doesn't look terrible, but like I said in the beginning, I would much prefer to trade this from a vol perspective than pretty much anything else. And you can see if you traded it from a vol perspective recently here, I mean, you would have got smashed. Again, depending on what term you're playing, but still, like something like Tesla in the near term still can have like really rough vol periods in terms of realized versus expected. Let's take a look at vol. Yeah, I mean, you can see it reflected pretty cleanly here. And it's been running a negative risk reversal skew, which again, doesn't surprise me whatsoever because of how how volatile it's been recently. So it's just been absolutely outperforming implied, which again, that's what happens when you trade stuff that's like this. Silent Sleeper says, at what point does UNH look like a good entry for a bounce? Mine is 300, but we'll see. Again, I wouldn't bother. That's not how I would trade UNH. The way that I would look at UNH is it's in a defined downtrend until it starts to consolidate and until it starts to rally. But it needs to consolidate. It needs to actually like display the behavior that you need to see. So again, I don't look at these things and say like, it's absolutely crashing. When do I think that this thing is going to go up? And it's because at some point it will likely go up. But while I'm sitting here trying to find that point in this, there are things that are already going up heavily following a really great earnings release. And I much prefer to trade that. Again, the question I would always tell you to think of before you place a trade is not, could there be a trade here? The answer or the question always is this the right place for my money? Like, is this the right trade? And I am always looking for easier opportunities more than anything. I'm not looking to trade stuff that is wishy-washy. I much prefer, again, stuff like this, like very, very clear, defined trends that I can try to capitalize on or breakouts. Again, I'll show you a really simple scan that I use pretty regularly. If we go to screener, let's just look for an earnings move. Let's say that we're looking for short deltas. We'll tighten this up to like the last 3 days so it's a little more relevant. I'm going to move this off to the side so that I can click through it faster. And let's see. So PSFE. So this, the way that I would look to trade this is if there's essentially a continuation below where it's at now. And as a betting man, which is what I am, I do think that seems likely to occur. I don't know for sure. The markets seem to like the call side of the equation, but again, if you take a look, most of it is short calls. So from an OI perspective, you can be misled and you could say, well, there's 9,000 calls against 2,000 puts. But what I can tell you from the recent activity today is that there's a lot of short calls going out. So this is probably, yeah, it's not super liquid. I mean, it's fine if you have a small account and you're only trading a few lots. But this is like, I would much prefer monitor this. Well, let's take a look at ALC. These are kind of tough with like these really just big parabolic drops. This, I mean, it's super cheap, but really high vol. So this kind of thing I would trade just short premium. But these are more so the types of like downside directional ideas that I would want to tinker with. And then for upside, there's tons that have had a really good earnings. There's literally tons and tons and tons of names. I got 213 returns in the scan for upside as compared to downside. So the market is absolutely showing a little bit of upside strength here, I think for sure. Anything else you guys want to talk about? I want to poke through maybe like a post or two from Reddit. I like doing those towards the end of the stream just so that we can see what's happening. We'll take a look in options and let's see what's going on here. And let's do hot and let's do, yeah, this is good. All right. Let's see what's happening in the world of Reddit. Options trading, strategy sharing. Okay. Let's take a look at this one. This says, thinking of getting into some long-term 2027 at the money options. I only have experience with 6-month out expiries. I don't even know what that means. What are your general recommendations for managing gains or losses? I usually wait to lock in when Delta is closer to 08. Already have a 30 to 50% gain. Should I just be making the play with 12 months? And then, so this I like because they're asking the question, but like this is a really ignorant perspective to carry on trading options. Because, so like this, right? When we're talking about if you're getting into longer dated options, and the first question is you have to ask yourself, why? Why am I getting into this option? Does this make sense? To me, if you're going into these longer dated options, it's literally just because you want to hold something with leverage for a longer duration. Like that's the point that you would go out to 2027. And that's okay if you are. But then that should inform the way that you're managing gains or losses. It shouldn't be based on Delta. If like, who cares if Delta moves? Delta will move for different reasons. I think what matters way more is what's your price expectation for the underlying and does it do that? So, and then it says, should I be making the play within 12 months? So like this, again, it just is kind of random. It looks like the Cliff Notes version for what I see here is like what I very regularly see, which is somebody that doesn't understand options. And they're trying to piece together an approach, which is fine, but they don't understand options. And if you understand options, you start to answer most of these questions for you because they're asking the wrong ones, like worrying about what expiration, if they're going to go to 2027 or 12 months or whatever. Like none of that really matters yet until you have the broader plan built, which is what do you expect the underlying to do and why are you using options in the first place? Based on that, that's how I would build a management approach. This is super common. They're not doing anything that all of us haven't done before, but this is just kind of like cobbling it together as you're going, which typically doesn't work super great with options, especially this style. So yeah, interesting one to take a peek at. Last note, there won't be a stream this Saturday. I have some friends coming into town, but Friday we'll still do the foundational. We still have one more episode to knock out for the Outlier Options Trading Foundation series. So we will do that. I will be around as always. You can hit me up in the Discord, be an outlier. See you guys later.